Report, where I share my 46 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Well, markets continue to soar. The question now is how high? Let's get into tonight's video. Well, welcome everyone. Just waiting for the database to complete, and it is complete. We're continuing to see more traction, and it's very impressive what's going on. It's almost an instant replay of last April. Here we are just moonshotting right to all-time new highs. No one cares about anything anymore. We're right back into it. Inflation's ticking up a little bit. No one cares. And matter of fact, we've been talking about this, for maybe 3 weeks now, 2 for sure, that the markets just continue to, deny that there's any effects here. We've traded down to, and I'll go through some of the details here tonight, we've traded down to the levels that I talked about in crude, around $90, so we're there. We should start to see firming up a little bit. Does that mean that the markets will back off? I'm not sure. I mean, you look at some of the numbers that came out, today. You see NVIDIA, all the big cap stocks, all of those guys are leading the way again. They're just piling in. And, I've talked about this probably for 2 or 3 years now. It's just the swarms, I call them, and the stampede markets where everybody just piles in. There's no fear whatsoever. And, this has been going on for multiple days now. I would say better part of 2 weeks. And we started to see the database get some traction. We're continuing to see that go on. So conditions, structure, all those things I always talk about have continued to get better. Yesterday, I was showing you the weekly sheets. I'll run the TradeIQ sheets tonight here in just a minute. We'll talk about some things while they're running, but we're just seeing that 7,000 level. That seemed like not far away. And by the way, I talked about some of those numbers last night in the sheets. We'll go through and see the weekly sheets again tonight. And this 70-40 level was just staring at us, and we're looking at 07. There's definitely more upside here, and it was pretty obvious on the weekly TIQ, I call them just TradeIQ seats. They're definitely just still screaming craziness, and it's very interesting as far as some of the metrics. I was just looking at a couple of things here. We got a 0.5 on the inflation numbers today. Just looking at a couple of notes here, and no one cared. It's like, oh yeah, that's going to come down. Maybe it will. I still think there's going to be restrictions on when the dust settles. I think there's multiple layers yet to deal with. Number one, there is no resolution to the conflict yet. That hasn't happened. The markets now, I think, just with the mentality of the prediction markets, that's the E-minis are prediction markets now, and they always have been to a point, but there's been little more maybe relevance to the macro and some of the metrics. And this is something I've talked about for a while, is that the metrics themselves have been discredited over the last couple of years. With all the shutdowns and break and different reorganization, I'm still not sure why we look at those numbers anymore. I'm hoping that we ultimately get numbers that we can look forward at rather than looking backwards, because once again, that's all we do is look backwards at numbers and then base about what's going to happen today, what happened a month ago or 3 months ago. So it's getting harder and harder to buy into that thing. Listen, I've been on Wall Street for nearly 50 years, which is hard to believe when you say that out loud. But the realities are, is everything's changed since the first day I walked down on a trading floor. It's changed completely. How we transact. We went from a digital and analog world yelling and screaming at each other on trading floors to digital world, and we watched all kinds of iterations of changes from decimalization to fractional shares to everything we see today. So it's a much different world. It's been interesting. I know a lot of you folks, maybe a bit younger than me, have experienced a portion of that, but even more so, just read about a lot of it. Well, I've watched it happen, and every time it's happened, there's been new, we'll call evolution of how markets react. And now where we are today is these markets are gigantic as far as participation and all that. But as far as the market's going right now, when they start rolling, it's kind of hard to stop. It's almost like, in a way, there's still a telegraph somewhere that some guy just got the news from the last 5 days of rallies today and goes, oh my, I got to buy today. So those guys are still showing up. There's still these late waves of buying that comes in. It does the same thing when we're declining, but they're just waves, and you just keep going. You think, okay, here's the resistance point. We're going to get some kind of reaction off of some resistance number. It's going to reject off of this price. It doesn't do it. It just keeps going. I was just looking at this, and I mentioned it a couple of days ago, that we're really, it just feels like last year, another, moonshot, only at a higher point. At least last time we were down better part of 30 and change. And then when we moonshotted, we started off with 11% range on one day at the bottom, and then it just went up. And every time you thought it should pause, should correct, it didn't. And we're seeing that again. So I'm just going to go off on a little bit of side trail here. But one of the things that I've talked about over the years, and I'll relate back, we'll start at 87 crash. The pattern that came out of 87 crash, it was this vertical move down, and then it just kind of went and just kept grinding until it went all the way up literally by 8-9 months after the crash of 87, which was about 38% in 3 to 4 days. It took a while to come back, but it just basically went up. But that pattern, that crash and recovery pattern, was on everything. I don't care if it was a 5-minute chart or hourly chart, daily, weekly. That pattern showed up everywhere, which was interesting, because I think what happens in humans and patterns, they keep seeing these patterns. They see these patterns. They respond to them over and over, no matter what the time increment. I've seen this. It's almost like a matrix that gets burned into everyone's mind. So I've seen that happen this April last year, April right now. Tomorrow's big day. Everybody gets to write checks. Typically, we've seen some reaction around when everybody's writing checks to the government. Let's face it, most people who work for a living, W-2 income, aren't writing checks tomorrow. They've already written their checks. So anybody that makes money differently than W-2 income is writing checks. So we'll see. I don't think it's going to matter much, but there's such a big drop going in backdrop in the background with so much cash around that a lot of people got heavy into cash. Our models are still about 40+% in cash. And it's until we get these intermediate models that come back into play, which could happen this weekend. Yeah, it's Tuesday, so we coming into Wednesday, but we could see enough traction where we get back above 42 and the money machine starts over again. And this is one of the cycles that I've watched since I created this environment. The very first year that we had a database was 1994 to 96. We had a small database, maybe about 3,000 symbols in our, and then by the time we get into 98, we kept accumulating. Originally, I think we were around 6,000 symbols around 98 when we first started bringing in money managers into this environment, and now we're 14,300. I used to joke that every company in America was going to be a publicly traded company, and that pretty much happened, where it just expanded. So we got number of symbols, number of participants have. I need to figure this number out because I want to know how, if we just went back to 2020 in the pandemic, I remember everybody was getting into the markets because the gamblers, sports players, those kind of folks were all piling in. And I remember talking to a guy early on in the pandemic. He reached out to me, really wanted to talk to me. He was telling me how easy the markets are, and it's so much easier than sports betting. Maybe it is, I don't know. And I remember saying to him, well, you have to hang around a little bit. You'll figure out it's probably not as easy as you think. So we are definitely in one of those other phenomena that we've seen last April, other recoveries. And I was looking at the chart, go, this looks just like April, only last year, except for it's not as low. It's higher, so we're able to achieve recovery and start talking about all-time new highs. And what does this mean? So I'm going to talk a little bit about this when we get into the analysis tonight on what's recognizable. Are there areas that are interesting? I think the weekly TQs, the TradeIQs, are definitely telling us a story. Maybe we'll do something tonight. We'll run a monthly and see what that looks like. I think I ran last week. I ran even a quarterly just to kind of get a crazy feel for what is the broad markets, because as you zoom out, even in the most recent decline that we had, as you get into the weekly, was not as suggesting a deep decline. That's why I kept saying I don't see any big major decline, choppiness. No one knew what this situation was going to be like, how long it was going to take. Well, now it's just the markets are just totally looking past it, but maybe that's not appropriate. I've been talking about the headline market that we've been in for a while. I think that's still subject to play. We could come in tomorrow morning and Trump could say something or something happen. The one thing that did happen with the situation, my headline on Substack last night, I think kind of said it, was that we went from the blockade being the biggest disaster to a genius move, because Iran, literally, they cut off their income. And they're not even willing to try to push a boat in there to test it, because they know what's going to happen. So when you've got somebody we'll call crazy as Trump, that's willing to say and do anything, you don't want to mess with that. My favorite line is never mess with a guy that has nothing to lose. And I think Trump has proven that he's going to follow through with this in spite of all the taco and all the stuff. There's some great memes out there right now, some funny stuff out there. It's amazing that the world has such a great humor. So let's set up tonight. I'm going to go through, I'm going to run, matter of fact, let me get something up over here. And so I'll come up here. I'm going to run these sheets and we can look and continue to talk about the markets. But I've loaded up 6. I've got, I think I put crude daily, weekly. I'll go ahead and start it here, and we'll start running the process here from the standpoint of just see what kind of numbers we're going to get out of the sheets. We're going to continue to compile the weekly sheets and walk through day by day. Once again, if you haven't signed up for if you haven't signed up for I haven't looked to see what the registration looks like for Friday, 4 o'clock Eastern time. We'll be running this. So here's first ES bullish momentum building, PPM surges to 0.56. So we're almost in extended mode. I'll talk about this in a minute, but we'll let these. So I ran ES, I ran the NASDAQ, and then gold, and then I ran the crude oil, something else. We can run anything we want, but the point of what we're seeing here in the configuration is just, I mean, it's explosive. It's like I said, we're just doing some preliminary research before we came on. It's getting pretty obvious that this thing is not quite ready to end, even though we're trading at the upper end. If you look at the chart on the right, which is ES, you can see that channel that's growing in. The orange lines are the market grid. So they're contracting, but more importantly, when we get into a strong trend mode, like I said, it's 0.57 is PPM1 right now on ES, and it's an explosive kind of pattern here. And I think we'll probably see this thing exceed, even though the red dot is trying to flatten out. There's a lot of things that's starting to get some stressors, but that's meant nothing the last 3 days. What we've done just in the last 3 days at the top end of this thing is interesting. I saw somebody comment even on maybe on YouTube or on Discord or somewhere where somebody was talking about they were talking about, no way I'm buying anything over 69.42 last night. That was the trade. That was the trade that the sheets put out, like buy over that level. And that seemed like a ridiculous thing to do. And I love what somebody said that I talked to the other day off of Discord, is the hardest thing to do is to believe these sheets when they happen. This is something I've been dealing with for a long time. I've been a quant running quantitative models in the markets with lots of billions of dollars in them since 1998, when we brought our platform to the advisory community. And I think from mid 98 till before, I think it was fall of 99, we had $1 billion in the models already at that time. Now, grant you, we're grabbing 50 and $100 million clunks, so we were it was building up quick. So we got all 6 have been run now. So let's go ahead, open up, and we'll just continue this. This is the daily. We're now into I'm going to I'm going to blow this up. I'm going to get off screen so I can do this effectively. But yeah, so we've got, this is actually breaking down, this commentary is all the commentary that knows all the rules and everything. But look at some of these numbers. I mean, you get bullish breakout above resistance, momentum, current price 70.12 is when I took this snapshot. Look at the momentum measurement system, the PPM. We're looking at 0.58. PPM2 is only 0.17, very close to 0.5, PPM3. So these are just now starting to turn up. And what will happen is once the market does hit a interim peak, it'll come back into where the PPM was represented around the 21-day and 40-day moving averages are going to be the support levels that we're likely to come into. So once we get to that level, then we'll set up a secondary response. So typically markets don't go V straight up. Like I said, we're referencing April last year. I'll go over to some charts and we'll reference all this stuff. So we're going to stay on this front end of this analysis right now, because I think this is going to be where you want to start to project. But look at there's a 90% chance to hit 70.52. We're trading '06 right now. That's for today. Okay, I mean, look at these numbers. 7100's even got a 71%. I mean, this is the profile that's being built. Doesn't mean this is going to happen today, but what it's telling you and how to interpret when you're using these sheets, quite a few of you have been signed up for this, you're going to, when you see this kind of profile, and so 69, 55, 85, these numbers are big. So what it's telling you, because of these percentages that you're seeing here, is that volatility is huge. The possibilities of volatility are huge. Chances are, again, you're looking at S1, R1. We never got down to the numbers that I talked about last night. We didn't quite get down to 6904. We did pull back a bit overnight. I went to bed at 8 a.m. this morning, New York time, so I was up all night. And now we're looking here. So S1, 6981, R1 is 7027, and you break. Let's see what the opportunity is telling. So target one. Look at this. 77.8 upside. 71. I mean, this thing is explosive in this pattern. On the downside, you have some potential 69.81 to 55. This is the volatility showing up, but it looks right now that we're looking at bullish bias favored with above. Right now, holding above R1, then you're looking 70.52. You want to monitor this S1 number, but that's going to be a far stretch. All this is telling us right now is that we're getting a lot of volatility that's being projected within the ranges. Chances are, and as it says up here in the commentary, is that all the upward pressure is up. The downside's minimum. The only thing that would happen there is, once again, a headline and something to blow that up. And down at the bottom, you can see all the here's all the insights and things to look at. So when you're taking a look at one of these sheets, what it's doing is giving you a perspective of the volatility. You want to go with the flow that's out there. So everything's still looking like it wants to challenge 70.27, and then the next level would be for it to go to 7.54. I mean, look at some of these numbers, 7,100 talking. All of a sudden, what happens in this environment is, once again, we get that thinning out where the liquidity goes away, and then once liquidity goes away, and if there's a bias, then you're just going to see these numbers go well beyond what you think they can make. And I think it's interesting in this type of environment, because a lot of times when you get into this type of structure from a momentum, and especially with the headline potential, and right now the markets are hearing, when they're listening, they're hearing the positive momentum than anything else. It would have to be something pretty big to probably bring in a negative push. There's so much money flowing that way right now. Everybody that missed, and now they're chasing, and the stampede is on. So we'll see where all this goes. Let's so we'll stay there. Let me let me get over here to ES, and then we'll finish up this analysis here, because here you can really see that steepness. So there's only one way to argue this thing. Even if you throw some Elliott wave as an Elliott-tician, it looks like maybe a 1, 2, 3. The thing that will tell us a lot about what happens from here, we don't know. You could say it's going to this. You can do all that, but from a structural standpoint, as long as we stay above this value right here, let me just bring that up on screen. Let me make sure I got it right. There it is. So 60, 66, 90, 53, I'm sorry. No matter what happens in the next week or so, as long as we stay above that level, we pull back into these moving averages over here, and it holds there, then you're setting up the potential for an extension to the upside. And I mentioned this when we were looking at the sheets just a minute ago, is the momentum at 0.57, the probabilities right now of getting below this 10-period moving average is approximately maybe 20%, 10%. So you can trade off of the simple 10 moving average. If you saw that print, that's a long ways from where it is right now. If we look at today, that number is what, let me just find the actual number here. 6802. So it's a long ways away. It's jumping fairly big numbers. You know, it's probably going about 20, 24 handles per day. So that's going to be 50 points higher. It's Tuesday. So by Thursday, the support levels are going to be jumping up and giving you the points where you can trade off of. And like I said, so I think I did a pretty good job at actually jumping right over the database. So I'll go back to that. And I just realized I didn't go through a lot of details there. So I'll go back after this and we'll cover it a little bit out of sequence. I was so excited to get into these things and what we're seeing. But the database is, you know, we'll just summarize it and I'll come back to it maybe later. But it's positive. We're pushing. I did show you that, but there's not a lot there other than we're continuing to get traction up around 50-50, and we're probably heading to 52-58%, and maybe it'll start to stabilize and dissipate a little bit, meaning that we'll see some grinding where we get buys and sells and it starts to rotate. I mean, there's a lot of symbols in here. There's 14,000 symbols. So yeah, typically you come in onto a channel like this and some guy's drawing a couple of trend lines talking about the indexes as a basket, and we know they're heavily weighted, but it's just different when you're looking at this more minutia and be able to get into the haystack and see what's laying around and what's moving. It's proof that the numbers that we've seen come back on as far as the new buys coming in the database, that there's a lot of interest in this market. Yes, the big tech stocks are moving the needle more than the others, but there are a lot of participants. It's not 7 stocks. It's 6,000 and 7,000 stocks that have moved enough to trigger these trend modes on these symbols. So it's significant. What's looking here, just real quick to cover this, is you see that the momentum is looking like it wants to bleed off, you know, looking into, you know, towards the 20th, 24th. We get a little deeper next week into the market. But this thing's got a lot of power, so there's going to be a lot that goes on. Let's stay where we are here right now, and I'll go back to the I'm calling them the TQs, the TradeIQ data sheets here in a few minutes, but let's take a quick look at NASDAQ here. Same mode, a little bit more power. got a little more of an upward curve here, but everything, like I said, it looks like around between the 20th and 27th, that final week. So we got this big turnaround. Let's do something here. I want to go back. Let's have the true flashback here. So I remember, and I got caught in this thing last year. This is last April, and what we're seeing here, we got into, this is probably about where we are right now. We got a little consolidation. We came into the 21-day moving average, and then we had this whole other sequence. And this was, let me just zoom in. That goes from around May into August. Now, the only way we're going to get that type of configuration, we're going to need to get the intermediate models back above 42%. There's some things that happen, and if we continue what we're doing right now, we're going to get there. We're already at around 34%. So this coming Friday could, just like that, just trigger us right into that mode. So, but then you can see we went into the rounding, and then we came into 2024 where we started this week, this year. And you can see here, I mean, if we look at this, this has been a terrible market. We know that this year. You know, we had a lot of rotation out of the techs. All that rotation happened, and we came down below here. We came right into the Fibonacci targets, just like we did last year, the second Fib target. You can see, let me get off the screen so I'm not clouding that. But you can see right here on the left-hand side, this was last April. We came into the second Fib target that was there. Now we just came again into the second Fib target. Like I said, the difference was, let me go back, is the amount of the structural decline. We get this big 1, 2, 3 move down, and then we get the spike, and then the right shoulder, and then the moonshot. This was, by the way, over a 40% rally off of the low. If we did that again, that would catapult us into big numbers. Let's just use the NASDAQ, and let's go up the scale. This is a daily chart, so now you can see. It's interesting, on that April moonshot, we went down to the weekly Fib target 3s, not quite, it's in here, but this is right in this level. And then we get this moonshot. Now we get this one, and it's projecting, I'm just trying to get some numbers, 27, like 28.5 is what's being projected off of this. And let's just, let's stretch this out a little bit. We haven't done a bit of a longer term look at this, but this goes all the way here into 23. This was the ugliness out of 23, but we came out of 23. Outside of that April spike, you've been within this pattern. This has been this little section here where we dip down in the tariff tantrum, I'm calling it. When we had this, pretty much we rebounded right back into this regime, which is this moving average regime. And if I bring this up, you can see all of we've just been in this noisy but high level, like we're above 0.25 to 0.5, which means we're in trend mode in that whole period of time. And this is NASDAQ weekly we're looking at. I'm just going to punch this up over. We're going to do a bit of a longer term review, and I'll come back and summarize. But you can see when we get into the monthly, we've basically been in this regime, and we're pretty close to satisfying some of the longer term monthly, which is that 20. Let me see if I can get this so we can see this number. Yeah, right around 27,300 on the NASDAQ. And meanwhile, once again, we're in these upper regimes of the angle of attack, telling us that just how powerful things really are here going. So let me see if I can get us scaled back so it looks like something we can look at. So this is the monthly regime. We just came right back into the 21-month moving average. So we're within this structural movement that looks like it looks like this market's going up forever. One of the things that we're going to need to watch for, this is just a longer term thought while I'm looking at this screen, is that we're going to have to watch what kind of formation comes out of the monthly chart, maybe coming into May and June. We'll have to watch the database, see if we can get back into a robust rotation from a database standpoint, which means that we would get back well above the 42% on the WaveTech database and start to really consider seeing another full rotation again. And I just want to come up for a second. One of the things that I was talking about, and let's just step back and talk about where we are right now from the standpoint of a longer term viewpoint. Is the longer term viewpoint, me talking coming into year end, also just as we came into the new year, the theory was that we were going to see all this CapEx investment that was promised. Now, and I think somebody on YouTube or somebody brought it up, and I looked through this, and I think it's a valid thought, is now what we're looking at is that CapEx actually going to show up, or is it going to be, because a lot of this money was coming out of the Middle East and out of Saudi and Abu Dhabi and all these places, right? Well, that might not be coming anymore. They may have to spend a little money rebuilding everything that just got destroyed. And that's why I kind of take us back to a moment of sanity when we're looking at these charts and they feel and look like they're going to go up forever. There's going to be a lot of reconsideration, and that's what I've been saying from the standpoint that what we're looking at is we have to evaluate what the damage is, what's going to happen. And I saw some guy I forget where he was out of, but he was a research firm, oil firm, and he said what I've been saying and what I've been telling you, and you can go all the way back to that special report that I wrote on oil when all this started, is that everything has changed. Who's going to go through Hormuz, who's not, what are the shipping channels going to look like, how are things going to move around, and I don't care what it is. It's not just oil, it's everything. So I think the whole shipping industry, partnerships, who's doing business with who, all of that's going to be renegotiated. And that doesn't mean it's negative. It means that it's going to be different. It's never going back to like it was, in my opinion. And I've seen these kind of disruptions over the years, and they don't go back. Like after the 87 crash, there was a lot of things that changed after that. And it never went back. Of course, we came into a new era, the .com, and then that bust, and then now we're in the AI era, and there's just, everything's different. We can think through things faster, everything happens. So what I'm saying is, while it looks like this is the challenge is going to be sometime between now and maybe first quarter of next year, we're going to have all of the midterms are going to happen. Of course, all of the so-called mainstream stations that absolutely nobody watches, by the way, all these surveys and all this stuff, no one knows what the midterms are going to look like. It's far enough away that things could change so significant. We're trading new highs in the markets, and maybe everything works out somehow. Then maybe we get the capital investments. There's so much up in the air now that I would have argued and did argue earlier in the year that these things are almost a given. Some of you know my nickname in the old trading floor was Dr. Given. I would have been arguing it's a given these things are going to happen. I even said these words out loud many times on this channel and Substack, that the probabilities of any kind of recession right now are pretty low. It's still very low. But a lot of things are going to get rethought, maybe for the better. We have to wait and see. I sound like the Fed. You know, I'm data dependent. I want to see the database come back. I want to see all these things come back. So let's do this. We'll segue here on about 40 minutes into the broadcast. Let's go over and let's talk energy. See where that leads you. Looks like there's some things coming out in the chat that I think I want to look at, but let's just go over to right now. Let's go over and take a look at crude right now, because at least for the short term, that's going to be a determination of where we're going. So let's go back over here and just see where we go. So I've got the, I'll blow this up so we can see this a little bit more. Hang on. Yeah, so this is, I ran this weekly sheet just a bit ago. And it's, there's still a structural deterioration that's going on. Let's just look at where the numbers, currently 89.84 when I snapshotted this. The S2 85.41, this 90.80, I still think maybe we need to lower the regime 85 to 100, but there's but look at this, at the numbers on a monthly basis. There's no probabilities whatsoever. There's still bearish dominance, and now this is the weekly chart. Just had to look at the values, and so we're trapped under S1. So that's 90.80, and it's interesting. It's giving targets right now to STX, which is 75. I think at some stage the oil traders will step up into that. Let's go and just come over to the daily chart here. This will bring us a little closer to reality. So still bearish. Everything's looking pretty bearish. It's breaking down through the grid support, so everything's getting broken right now. Look at this. We get this ppm1 is minus 1.15, so we're in full-blown extended ppm mode to the downside. And then you start to see here, all of a sudden, 88.66 is 77. So that's probably, we'll look at prices here in just a minute. This is going to set us up to where the key support levels. So now 88.90. This is a daily sheet. Let's see what. Yeah, so it's telling us this is a key number to watch. 90.46. If we break above that, then we got R1, R2, 93.95. I think there's a reasonable expectation for things to put this up. Let's put over on this side chart here. Let's just put crude oil over here on a daily. See, you're right at these levels here where we're coming right down to this rising 40. I talked about this last night, that we're probably going to get into this wedge shape here on the 10 and the 40 period moving averages. So that's going to put us around that 88 number with a higher 95, 97 as a range. But those values are contracting. And what that tells you is that it's going to get narrower and narrower until we finally get a determination of directional move, whether it breaks above that 10 or the 40 and it all rolls over. Most likely is more of a consolidation here, and I think at some stage there's going to be some interest in buying this, especially around $88. So I'm narrowing things down to 88 to about 95 there. Let me just get over. Let's come over here and put a bigger chart so we can see crude over here. This is monthly, so you can see we got this is actually confirming what most people are saying, is that we got this big blip. It's almost like a VIX chart where you get the big blip, rally up, and then you come back in, but we still have a lot of power in this 10-month moving average, and that's going to come in, between this $88, and we're most likely, I always call it an echo bounce. So you get this big spike, you come down, you hit into the support levels, typically key moving average. This is a monthly chart, so it's a longer, we'll go top down real quick here. And then what you get is that the markets will hit that value point, that support level, and then they'll do what I call an echo bounce or a retracement. And then then we just figure out where that is, and we can figure out from that next bounce where this thing is going to settle in. And I still think the 90.95 is going to be the number. I don't think it can get much lower than that. We could get a reaction where it goes a lot lower, but I'm telling you, the oil guys are just waiting for that point to get in there. All right. I'm feeling like this show is equities and oil tonight. I don't want to try to get too much beyond that. You can go to the Substack tonight and kind of zero in on some of that. And there is, I'll just say this real quick, there is a possibility that the Substack may end up just everything being on Advise. So the new website where to get to a lot of our new technology is Advise with a Z, so it's ADVIZE.io. And I may end up just getting everything into my own ecosystem, and including, like I said, the meeting on Friday with Advise coming in here. Let me just see if I can get something here. So it's ADV. So if you want to go to the meeting on Friday, come here. Weekly, I'll be going through setting up a weekly trading plan using the sheets. That's my primary effort here. You just click on this button. It'll sign you up. You've got to register to get in. And like I said, I think probably next week will be the last free registry. And then I'm going to make sure all of the founding members that have signed up, that they start to get their position in the Zoom permanent rooms, since you're registered and you're a member, to get into those rooms. And there's it's going to evolve as we go forward. But yeah, but make sure you get in there, and we're going to be probably for sure focusing on setting up a trading plan using weekly and running daily sheets on everything. And then we're going to build it out. I'll make sure the room's locked down. I apologize for last week's recording getting so messed up with bleeding mics and everything. I got that figured out. I got it this time. So anyway, but make sure you come there for that. Let me go ahead, since we're right at about 10 minutes to go. Let me come up and I will, let's look at some of the comments and stuff that what you folks are talking about. Um, yeah, who knows? Chief, was it Chief Ride Chandler? Once a new Fed president is in, yeah, well, a lot of things are going to change after this. Yeah, I don't know if they're. It, I think a lot of folks this whole taco trade is that's the way Trump negotiates. I mean, anybody ever negotiate a deal, even if you're going splitting the guy's number in half, you're going to do this, you're going to do that. That's a thing. Yeah, it was funny. I saw Steve was live on X, right? Bonita Beach. Yeah. Next time, tell him I said hi. I owe him a call actually. Um, yes, Todd. Yes, we all will be wiring money. um, all right. Let me just see anything else going on here, folks. I'm not sure, Jeff Kranz. Explain yourself, Bob. Why did this change so fast? Last Friday we were in a channel. Yeah, a lot of things are changing. Everything with me. Um, yeah, Todd, you're right. I was talking about that where we were going to see buying above the 200. Yeah, this is this has been quick. There's nothing slow in this market anymore. Hasn't been for a while. Yeah, um, I think the Fed is not really a factor, Mike, from printing more money, fiat. Not really a factor, I don't think, here right now. Um, I still think they'll end up lowering rates. We did get a point 0.5 print, but we'll see how everything goes out. Bear with me a second, folks. Well, I'm just looking at a couple more comments, and then I'll come back with some final comments here in a second. Yeah, I don't know. It's a pump. We'll call it a pump, but when it's my job, our job as traders, anybody that's involved in this market, it's your job to figure out the cash flow. If it's pumping, that's your job. Go with the pump. Don't fight. As the old world, my mentors back in the uh, late 70s, early 80s, you say don't fight the tape. And I actually have talked about this before. I actually was in an office where they still had a ticker tape, and they had the abilities to. Uh, uh, this guy was a pretty good tape reader, and I got to hang around with him a bit back in 80, 81. It was kind of interesting, an old timer. Sorry about that. Yeah, so I think we're pretty good. We didn't get through a couple of the markets we normally touch on. Um, I I've, I'm really I'm working on trying to make a couple things. Just real quick, Substack comment is the Substack. I'm trying to condense this thing and not make it a 20-minute read. I would like to get to the point. A buddy of mine was said, Bob, just sink your putt and get out of there. So I'm trying to get it kind of narrowed down a little bit less. I even want it skinnier than it is, because now with these sheets available, you've got the the commentary here. So for example, let me just come back over here. Is right here on this commentary, you got the commentary right here. So I don't think it's going to take an awful lot of money to stay in the touch. And the fact is that you can come in here and put in some of your favorite stocks and other things you're trading. It's just much more powerful. And I want ultimately that the Substack is really the next level, or more of the macro view, and a few things that people that don't want to have this kind of technology around and things of this sort, but need some backdrop on some things. This new tech that I put together is just so powerful. Quick comment: if you are looking to sign up, if you get any kind of weird error signing up, we're having issues with Yahoo Mail, this old clunky mail, and we had some issues getting an error on the setup. So just drop a quick email. I'll get it fixed right away. It's pretty simple. Hopefully tonight's session I'll have that all cleaned up. It's just some of the growing pains. We're like I said, we're probably not that many days away from closing down the founding members. So if you're thinking you want not only the discount, but every founding member, you guys are always going to be the lead ponies on new offerings and new things that I'll be putting out in this environment, because this is where I'm going, folks. I've made this decision. I put an awful lot of commitment into doing this. The beauty is these sheets are virtual, Bob. They have so much knowledge in there. I mean, there's like a whole GPT of Bob in there. And there's going to be some really, really interesting things that you're going to be able to do. And so keep hanging around. There is an annual membership, but a lot of this stuff is, like I said, become Liberty Insurance. Buy what you need. And so once you get into the ecosystem and it builds out over the next 6 to 8 months, you'll see this is going to be, I think this is the way tech is going to be delivered, rather than signing up for there is a service, but they have multiple levels of things that you can do depending on the type of things you need. I think when you see it all built out, it's going to be pretty amazing. I'm staying with what I call TQ, which is TradeIQ. That's going to be prominent. It's going to be a couple months, but I've already got 2 projects working on the side, and we'll have some new tech coming out soon. So we're right at an hour. I like to keep to this hour. So we're going to continue to do this. Ultimately, like I said, we're here at, in the evening. Ultimately, sometime, we'll say 3 to 4 weeks probably in the future, my whole day is going to alternate during market hours, and we're going to, I've got some big jobs that I'm doing right now. Like I said, I went to bed at 8 a.m. New York time, and only slept about 4.5, 5 hours. I don't sleep a lot either, anyway. So not like Trump where I can sleep 3 hours, but I do 4 and 5 a lot. And of course, there's always afternoon siesta or something in there. But just know this is where the channel's going. There's going to be a lot of educational stuff. The Friday thing will give it a few weeks and get our legs under and get some structure. I like to do things in a structure, so keep hanging out. And I don't know if there's any last burning questions out here. Let me look. Yeah, market's never wrong. Absolutely. Yeah. Yeah, thanks for all the nice comments. I really appreciate that. You know the rule, the only rule on this channel, you can disagree, you can do everything, just can't call each other names. And, you know, that's never a good thing when that happens. Anyway, thanks again, everybody, for watching. Really appreciate it. You know, check out the Advise channel that I was showing you so that you can just give you one last view here. Go ahead and go to ADVIZ, as in zebra, E.io, and check out what I've done. I've got a really good explanation, I think, of there's some elements from the sheet, but also the angle of attack and some of the primary theories that I've used since literally 1983 is when we first developed that, which was nothing more than understanding probabilities of trend lines, which are AKA moving averages and simple averages, so that they were easy to understand. And never seen a reason to change to exponential or weighted or you know, VWAPs or any of that stuff. And if you use them, fine. That's fine. You know, we all have kind of these little things. So moving averages are good, and you'll figure out everything. Anyway, folks, again, thanks for watching. We'll see you tomorrow night.